Joseph Carlson, how you doing, man? How you feeling? How's your bunghole? Is it a little raw? Is it a little red? Is there some blood and fecal matter dripping out of it? Man, I heard that you were a really, really smart guru. I heard that you knew how to pick stocks. I heard that you can beat the index over the long run. You're such a genius with your little bench press in the background that you don't use. Or even if you do use it, you're just benching the bar maybe once before you collapse in exhaustion, you weak soy boy. Anyway, we gotta laugh a little bit at Joseph Carlson because a stock that he was shilling, Duolingo, has utterly imploded. Now, they announced some pretty good earnings, right? The earnings were good. And wow, look at all the revenue growth and the profit growth and the free cash flow growth. Everything was great. But it seems like some guidance that they gave out, the market didn't really like that. And I want to give Joseph Carlson some advice here, and then we're going to talk about why he's a fatally flawed investor. My advice, Joseph, your grift of closet indexing actually works very well. You see, what Joseph Carlson does is he buys all the individual stocks that are highly represented in the index. For example, Apple, Microsoft, Amazon, Netflix, et cetera, et cetera. If you look at any index like the S&P 500 or, VTI, the total US market, or VT, the total world market, which is my investment, you'll see that all of those large companies are at the top of the index. So by buying that index, you're actually already getting exposure to each one of those companies in the wrapper of the ETF. But Joseph Carlson, he's got a very devious little grift that he does where he puts on this air of being an analyst. Oh, yes, look at the free cash flow and my ball trim software. And he buys all of those stocks individually. So you look at these companies and you're like, wow, he's picking stocks. He's a genius. He's so smart. I need to sign up for his ball trim software and give him what, $10 a month or whatever it is? Because he seems to know what he's doing. When in reality, he's closet indexing. He's recreating the index. I mean, personally, if index funds didn't exist, I would closet index. You want to know why? Because I believe in index fund investing. I would just buy in the proportions the largest stocks in the index. That's what I would do. But Joseph Carlson can't admit that he's actually a secret index fund investor. Instead, he puts on the air that he's doing analysis. Now, with Duolingo, I mean, the company's financials are solid. They're doing great. I mean, massive revenue growth, massive profit growth. From a financial perspective, from an accountant's perspective, I don't see any major red flags with the company. But it's not just about accounting, okay? It's about understanding that the market is very efficient and the market already knows that Duolingo has been doing well. And that's the thing that a lot of you, especially Joseph, you don't seem to understand this. See, Joseph's fatal flaw is that he basically just pulls up prior year's free cash flow and he extrapolates that free cash flow growth into the future and he buys those businesses. He finds high quality, basically large tech, high quality businesses that have had consistent free cash flow growth, and he buys them. That's what he does. He looks at the past performance and he extrapolates it. That's his genius investment strategy, okay? And, in some markets that might work, right? Because, maybe the extrapolation is accurate. Maybe you just draw a line based on prior historic free cash flow growth, and the line actually matches or even exceeds what you drew, and you get rewarded for that. But there's also times when you can extrapolate growth and the growth doesn't happen, okay? Because historic growth is historic growth. It is not future growth. When you're picking individual stocks, You're betting against the wisdom of the market. You're basically saying, I know something about this company that the market is underappreciating. The market isn't seeing something about this company that I can see. And the market has a lot of participants, and a lot of those participants are very active investors with institutional or big money backing, and they're probably doing better research than you, okay? And that's what happened to Joseph Carlson. It's the same thing. He looks at prior free cash flow growth. He looks at prior revenue growth, and he says, wow, look at the free cash flow per share. It's growing very fast. And it's going to keep doing that in the future. And what happens when you do that is if the narrative changes or the historical free cash flow growth doesn't translate into future free cash flow growth, you get your cheeks clapped. So here's what Joseph Carlson's going to do, okay? You know, he's getting clapped by Duolingo. Here's what he's going to do. Going forward, he is not, at least not as commonly, he's not going to take positions in smaller market cap companies. He's going to double down on closet indexing, because closet indexing actually works when you're trying to deceive morons. You've seen that his strategy actually has a fatal flaw where he's just extrapolating past performance based on his ball trim software. Personally, it kind of is useless. It kind of is useless because at the end of the day, you're just guessing the future. That's all you're doing when you're picking stocks and you're trying to get an edge on the market. And that doesn't always work. So Joseph Carlson, he's just going to double down. He's going to go back to closet indexing. I mean, he's already a freaking closet indexer. Go look at his story fund. It's like laughable. Like as soon as I saw what he was doing, I laughed my butt off. And you can call me stupid, right? Oh, you buy VT. Yeah, I have the same stocks that he does. All of them. They're all on the top of the index. You're not a genius. You're not a special high IQ investor because you're buying the largest companies in the world that are already represented in the index. You might as well just buy the index. I know this is a difficult concept for you people to understand, but I'm just gonna buy this stock because it's got good cash flow growth, bro, and I'm such a genius. And then you look at the index, it's the same freaking stock. Like, come on, people. Just buy the freaking index. Just stop, okay? Whenever I see people buying large tech, I laugh my butt off because people can't understand that ETFs have holdings. They can't seem to fathom that. They think it only counts if you buy it directly. That's not true. The index has the stocks, okay? So Joseph Carlson, he's fatally flawed. He's not a good investor. He's a clown. He's a closet indexer, and he uses the deception of closet indexing, making you think that he's actually doing real stock analysis in order to sell you ball trim and to get lots of views on YouTube. His opinion is irrelevant. He's a clown, okay? So I'm sorry that your cheeks are mincemeat, Joseph Carlson. I think it's kind of funny. I'm actually not sorry. And, you know, I wish you the best. Go back to closet indexing. It'll work for you, okay? Anyway, like, subscribe. Consider joining as a member to support the channel. Consider booking a free 30-minute tax consultation. I am a certified public accountant and would gladly do your business and or personal taxes any state in the United States. You can talk to me for free. I give you upfront fixed quotes for tax preparation, and I'll do your taxes like a boss. Cheers!